You can hit all 7 of these goals in 1 year, and we just need to know what they are and then check them off in the right order. And we found that after helping hundreds of people retire over the last decade and a half, hitting these 7 goals in 1 year, that could actually increase your confidence in your retirement plan and your finances overall. The most important thing is increasing that overall sense of freedom and peace of mind. Now, the difficult thing with improving our finances is it seems like all of these unending tips and techniques are coming at us from every single direction, and it can get overwhelming and it can kind of just get confusing on what we should do next. So what we're going to do in this video is line them up in order of importance so that you know the very next thing to check off, the very next thing to do, and there's a clear path to follow. And as I share the first few, you might realize you've already accomplished these things, and that's a good thing. So check it off and then just move on to the next one. The first one is one of the basics, but I've got to mention it, and that is to graduate to the retirement cash management system. We've heard of the emergency fund before, but in my opinion, the emergency fund becomes less and less important the older we get or the closer we get to retirement. You know, the emergency fund, that was really important for our 20s, 30s, 40s, maybe 50s when we didn't, it was there because we didn't want to go into debt if there was an unexpected expense that came up, right? But by now, you've probably got money in your 401k, your IRA, or other retirement accounts, maybe a Roth IRA, and hopefully you've got money in a non-retirement account like a brokerage account. And if you've got that brokerage account, some retirees will invest that and make sure that they've got enough in readily available money that's not going up and down with the markets in case they need to replenish their bank account or in case a big expense comes that they need to get at right away. And they treat that brokerage account, a portion of it, as their emergency fund. And I'll get to how much cash that we should have and a good goal there for goal number six. But one option that is related to cash management is just to know what your checking account floor is. And many retirees, they don't want their floor to be zero in the checking account. Let's pretend that their expenses are $10,000 a month and their income from Social Security and other investment accounts is $10,000 a month, which is great. It's paying, you're not a surplus, not a deficit each month. Now, if their account balance floor was zero, they're cutting it pretty close every month. That's obvious. So the idea here for retirement is pick your new floor. It could be 3 months of expenses. So make your new checking account floor $30K is the new zero. So you'll have $10K come in, it'll go up to $40, and then you'll have $10K go out over the month, and it'll go back down to $30. Now this gives you some buffer. It gives you some leeway there if you had a bigger than normal expense or maybe real estate taxes or whatever it is, and it ends up going below zero. You're not having to go into other accounts out there and pull money into your banking account, but you've just got enough in your checking account to cover it. And then you've got a few days, weeks to manage and either replenish it from the brokerage account or somewhere else to get it back to $30K. This seems very simple, but our clients have said that it really increases peace of mind because they've got some buffer. They don't have to worry about managing too many accounts within a short amount of time. And since it's given them peace of mind, I wanted to share it with you too. So goal number 1 is update your retirement cash management system. Now, goal number 2, we've heard this one before, but we might have ignored it because it wasn't that important to us when we were making good income, when we had our careers or if we had a business, money was coming in and we didn't need to do this. And that is budgeting, or at least tracking our expenses. And it feels like a pain. The word budget can feel like a pain, but there's ways to make it easy, which I'm going to share in this video. But now, when we're retirement planning, getting detailed on expenses is really key. It's a key part to having a successful retirement and, again, increasing confidence. And there's actually a critical step that a lot of retirees forget to do when they're taking this or accomplishing this goal. And I'll share that too. But for now, how do we make this easy? And I would say the best way to make it easy is go to one of the online tools, whether it is Monarch Money or Tiller or YNAB, You Need a Budget is the name of it. If you can automatically track your expenses using these tools, there's other ones out there. It can automatically track expenses and then categorize them. So you can see at the end of the month how much was spent on groceries or how much was spent on eating out or entertainment or home expenses or auto, whatever it is. You get a clear idea of where the money is going. And not important right now if you're working, maybe, but when you're done working, it's really important. And a subscriber to the channel reached out last year and he didn't think he could retire because he used one of these tools and he figured out the monthly expenses. And then he added some bucket list items that he wanted to spend money on each year, some trips and things like that. And the plan looked pretty good, but he just felt like he needed a little bit more money. He wanted to save a little bit more to feel more confident. So he decided to keep working. That's the decision he made in his head. Then we went through this exercise of listing what expenses were needs and what expenses were wants. And his needs were things like housing or healthcare, auto, food, insurance, things like that. And then the wants were some of the trips or some of the big items that weren't essentials, but things that would make life just a little bit more enjoyable. And as we did this, he realized the worst case scenario, say that the worst case scenario economy happened or the markets didn't cooperate, he could eliminate some of those wants if he absolutely needed to, some of those expenses, and he would be just fine covering his needs. And that helped him gain more confidence in his plan. And again, what he said was, it's less than I thought. So he was able to do it and end up retiring sooner than he had planned. So goal number 2, know your retirement budget, and then know how it splits into needs versus wants. And if you're liking this type of video so far, let me know so I can make more like it. Now, on to the third goal. Again, when we were working, we would look at this periodically, most likely. But now, as we're getting closer to retirement, or if we're in retirement, keeping a closer eye on it is important. And that is your net worth. Those tools that I mentioned, like Monarch and the other ones, Tiller and YNAB, they can automatically track net worth. But as a simple reminder, it's what you have minus what you owe. That's debt. That equals net worth. And the goal here is just track net worth number, know what it is, either quarterly or monthly if you can do that. If you've got the tools doing it for you, might as well check it monthly. Now, goal number 4 is to be debt free. Now, whether a mortgage is good debt or bad debt, that could be debated here. But one thing that everyone can agree on is that credit card debt or maybe auto loan debt, there's no advantage to having that, especially for retired people. If you've got the assets saved, create a plan to pay off that debt before retirement. And then one other thing on mortgages, there's a financial factor that works into the plan, right? For financial plan, that's obviously financial related, but there's also an emotional factor. And we'll create a retirement plan for people and see that financially, a mortgage in retirement, it's okay. It's not harming the plan at all. But sometimes clients, the emotional factor will outweigh the financial factor and they'll decide to pay it off. And that's okay too. There's not a bad decision. Now, obviously, if there's a red flag or yellow flag, we'll make it aware and then they could solve that problem. But if it's not, it's really, where do you feel? Really, it's around feelings and emotional. What delivers the most peace of mind and doesn't harm the plan? That's a good decision. So if you're working with a planner or using one of the online tools like my favorite retirement planner below, look at the plan and do some of the what if scenarios. What if you did pay it off early? Or what if you didn't? How does that impact the long-term plan there? And that brings us to goal number 5. It's nice to have the Monte Carlo image like this and show a success rate, for your 99% success rate, always good to see. But we also want to have a draft cash flow projection. That's goal number 5. It's map out future cash flow, meaning what accounts are going to be sending money at what time or what age. A simple way to do this is list all your assets on the left side and then the value there. And then to keep it simple, even though I don't love the 4% rule, how much would or could, not Social Security, that's just fixed numbers you can find out. But if the rest of these investment accounts, what's 4%? What does that come out to for each one of those accounts? What's the total estimated income there? And take that number, compare it to the budget that you came up with, the estimated budget, and see, are you close? Are you far off? It's just good to know. That's just doing this is a goal in itself. The next step is to get a little bit more detailed. Maybe if you're working with a planner, something like this, where you've got the accounts here again, and then you've got your ages here, and what account and when are you going to start? It all depends on your income plan. It's always changing, or it's specific to each one of you, but that's just an idea to look at. One way to visualize when the money is going to be coming to you and when's the ideal scenario there. As you can see, just as an example, a lot of times with Roth IRAs, if you've got kids, if you want to pass money on, those are sometimes the last to spend. Tax-free money's passing on to kids. So sometimes that's the last thing we'll see there. But anyways, let's move on to the next goal. And that is to draft a real retirement plan, one that factors in all the things we went over so far. So it's all your assets, your expenses, the investments, how they're invested, and that helps you determine the proper allocation, how you should be invested. And that gives you the goal investment return. For a lot of our clients, it's what's the minimum rate of return we need to still see the highest chance of success in the real plan. So the two ways to do this, one is work with a planner, get something detailed with all the what if scenarios like this tool here. Another one is a DIY option, and it's using Bolden, the link below. And it's, if you're not working with a retirement specialist, then you can plug in your numbers, and that gives you a pretty good idea of it's actually the best retirement planning software I've seen that's consumer facing, where anybody can use it. There's, I think, a 2-week free trial. But take a look at the website, see if that could work for you as step number one. And both those options, they can help explore multiple what if scenarios for your future, like life expectancy, inflation, expectations, market conditions, your risk tolerance, and the withdrawal strategy. So either one of those could work. The next goal is actually not about you. The first 6 were about you. This one is about the people that you love. And we see so many cases of this where things go wrong when someone passes away, and it has to do with wealth and the kids. And it can cause a lot of distress, and it's just not preparing your kids or your heirs the right way. So goal number 7 is what I'd call buttoning up your estate plan. And that just means making sure, doing a review of wills and trusts, making sure it's in order, making sure your heirs know where to go when you pass away, if you pass away, or if you get sick where you can't act on your own behalf. Make sure that they're prepared and they know what to do. And if you've got the trust, make sure it's updated, check with your successor trustee and make sure that's still the person you want it to be. And do the beneficiaries match with the intended, what you want to have happen? Doing a review each year is actually not a bad idea, just to see amounts for each beneficiary, what they're getting. Doesn't hurt, and it only takes a few minutes, especially if you're working with somebody. But just reviewing this at least every few years is really important. And if you don't have any of the documentation now, it's a simple process. Find an attorney and just make sure your wishes are going to be met. Now, if you've watched this and you haven't hit all these goals yet, that's okay. Write them down or like this video so you save it and come back to it later, and then just start to get them one at a time. And when you're ready, I've got another popular video here to make your retirement even better. Take care.